with you guys, and obviously we've got some really exciting exciting moves is an understatement. We've got a lot of volatility in the market. I think Algo 17, at least from a perspective from looking at markets and trades, is something that a few people have had some really good success, and a few people have had some questions on what's going on and how to work it and make it more efficient. So I want to make sure that we first and foremost address all the issues. If someone had questions that they wanted answered specifically, if you would, as we begin our presentation, start typing those in the room. And you can type them right there in your text message box, and I'll get to those questions at the end. So that way, if you have questions that you know, maybe we'll address some and you don't, and then maybe as we get to the presentation, you might come up with some. Don't be shy to type those in the room. So then I will be able to answer those live. This is being recorded, and we can always go back and look at those. You can review those questions. Please take a moment to read this risk disclosure statement. I think it's pretty obvious that trading involves risk of loss. So, I mean, that's kind of obvious. It's kind of like being as a child when they tell you don't touch the fire, you could burn yourself, right? It's like, well, it's pretty evident, but we still need to put that out. All right, so let's get right into it. Algo 17, when everyone opens up a TradeStation, first off, what is the big difference between Algo 16 and Algo 17? There was huge differences in Algo 16 and Algo 17. And the huge difference is we were able to consolidate, instead of putting a scan and optimizing one size fits all as far as buy signals, risk reward, as far as sell signal, we separated those because, as we all have discovered, market dynamics are different when we go from bull markets to bear markets. I mean, the first foremost difference is usually we see in bull markets we open a little lower and close higher, and we get green candles. And of course on downdraft markets, we all have noticed that markets go down a lot faster than they go up. So there is maybe a time frame that needs to be looked at as far as whether or not a buy signal, if it takes too long to move up, and you have an optimization for a trade system that for short only, for example, longs might be a little bit different. This is a 60-minute spider outlook, and just so that you know, we are using, again, person Algo 17Xtreme, and that's what this tonight's session is about. So what the difference, again, if you have 16, let's just go through the to format things immediately. And if you're interested and you wanted to, for tonight's purposes, capture this particular strategy settings, then that's okay with me. The question, there is a question, and again, I'm going to spend, if I see the questions in the room and I can answer them right away and they're relevant to the topic I'm on, I'm just going to go ahead and answer those questions immediately. And so instead of maybe we get to a question and we run out of time, I don't want to do that. I want to get to your question. So we do have a question. Will extreme volatility help or hurt the algo? So that's a great question, Jerome, and it has a lot to do with one of the components which the algo optimizer put in your hands. The reason it was given to you was because most people that go out and use a trade system or buy a system, the system is back tested for an ideal trading environment and doesn't adjust for one item. It's called average true range, right? Or true range, let's say. If we are in an S&P, let's say E-mini S&Ps, most people are familiar with the E-mini S&P futures, right? I mean, it's just a yes. I mean, I think most people are familiar with E-mini S&Ps. But so let's just say, for example, I don't know in the room who's more familiar with futures and who's more familiar with equity. So I'm just going to go over here and get to our first and foremost average true range. Why is that important? Let me go over here. We'll start here. We're going to go up to the futures page, and I'm going to show you something here, and we'll look at the E-mini S&Ps. We have a 59 at 10-day. Now, for myself, in using this, I'm just going to go over here and format so you can see what it is, 10 period. So on the person's lifetime, and this is to get the Algo product, you obviously need the settings and the indicators that are in the person's lifetime package. Now, what we've done is some of the more relevant and most important analytic tools. Volume. Well, volume is very critical in my work, and I think most people would agree to using volume. It's the lifeblood of the markets, and we just need to compare one. How do we know that volume is weak or strong? Well, we got to compare it against something, and what I do is I compare, for example, one of the series of data that I like to look at is volume, and I like to compare it here to a, in this case, 50-day. So what is the average average daily volume in the last 50 days? And you can see measuring a move of 1 day versus the 50-day average, for example, and you'll get a gauge of, is this a strong volume day or a weak volume day? All right, so that's one of the measurement metrics that I like to look at, which we've incorporated in the radar screen. Next is the range. What's the current day's range versus the 10-day average true range, right? And in this case, it's 59 points. Well, what is the normal range for ES? In the last 10 years, on an average given time frame, 60% of the time, it's been about a 25 handle move. 25 to 22 is a low. In 2015, I know people can't remember this. Maybe you might not be able to remember that far back, but in 2015, I just did a seminar on this, and we're going to do another one in November, so I'll share this with everybody then. But in 2015, when a really lousy day in the market was when we had a 22-point range. That was the tough, that was like really bad. If you fast forward and we go to like October of 2017, a year ago, we had a 9-handle range. Right now, we're in extreme volatility, and we're near a 60-point range, and that's actually come down a bit because we were seeing like 80-point ranges in a day. So Jerome asked the question, number one, will extreme volatility help or hurt the algo? We look at the metrics or look at the average true range, because as you start to see ranges expand, and many of you in the live trading room, you probably remember hearing me for the last month since the beginning of October. Hey gang, the volatility is expanding, therefore reduce your lot size down and reduce your time frame down, and you're going to need to alter and change and adapt your algo optimizer. Why would I say that? Because what you're saying, Jerome, is absolutely true. If you take, for example, an E-mini S&P system, I mean, you take a look at one single bar. And so I think this is the education that helps you become a better trader and get more out of the algo optimizer. And we'll put this together. You're going to be excited to learn this. Just wait 2 seconds. If I take a look at one single bar, I mean, I'm going to just pick a bar. On a 15-minute time frame, you're talking about an 8-handle move, and that's a small bar right here. On October 31st at 12:30 in the afternoon, the high was 27.32, the low was 26.25. I mean, fast math will tell you that's a 6-handle range. If you take a look at, as we get later in the afternoon, at 2:30, we have we have a what do we got? A 12-handle range. That's $600 in one single 15-minute bar. Now, let me repeat myself. 12 points, 15-minute bar, 12-point, 15-minute bar. A year ago, the whole day was 9 handles. A handle means a point. There's 4 ticks to a point. So here's where this information would be critical for you. If you go to format strategy and you have a sell signal and you have, for example, an optimized function that says max trade loss $800, guess what? If you get a sell signal and the risk is greater than $800, it's not going to get you into a trade. That's number one. All right, so we have a comment that says the screen is frozen. So let's refresh this. Here we are on the S&Ps. Did everyone, just to make sure we go through that again. Can everyone see? There should be a radar screen. The TradeStation radar screen should be projecting right now. Okay? Some people say yes, some people say no. All right. So I'll just refresh it. Now I'm going to go super slow on this because, yes, it is being recorded, number one. But number two, I want you to know what to look for when you review this. And it will be important to review. The question at hand is wild volatility going to hurt or help the Algo 16? Well, volatility, we need the markets to move. But if you have the markets that change, and I mean, we didn't change what we call the S&Ps. They're called S&Ps. We didn't change, maybe the margin requirements can change. The exchange sets that. The ticks don't change. The contract value based on price would change, right? But every tick is $12.50. There's 4 ticks to a point. Every point's $50. That hasn't changed. So what makes the S&Ps different today than 2 years ago, a year ago, besides the valuation? How it trades, its trading ranges. So a trading system, if you have a trading system that you buy that says, hey, when X moving average crosses over Y, get long, and I'm going to trail a stop, or it's going to get out at a specific profit function. What do I mean by that? Well, after 4 points, get me out. Well, what is your risk on that? These are the kind of considerations that go into a trading system. The function of volatility, your job, what you need to know is the average true range, and we're going into an expansive average true range, or we're going into a extreme price movement, and you've got settings for a mild trading range, then that's not going to work. But you personally have the ability and the control to change your system's function to adapt and adjust to the increased trading ranges. And that's one of the incredible functions. And so if you take a look at a sell signal and you say, well, 15 minutes in this environment, it is probably, each 15-minute bar might be too rich for my blood. I'm going to go and switch this down to maybe a 2-minute system or a 5-minute system, or you're going to have to go in and do what? You're going to have to go in and change your maximum trade loss. So on your screen right now, you should see your maximum trade loss on this screen says 800 and your max take profit 1200, which regardless of anything, if a trade generates $1,200 profit in this particular model, it's going to get you out of your trade. Okay, so that's where, Jerome, to answer your question, volatility, if it's really high and you have a system that says, well, I'm only going to risk $200 per trade and I'm only going to take a profit at $400, when the volatility ATR, if you think about it, if we are approximately 3 times your average yearly, on a 10-year average, we have about a 20, I'm going to write this down. I'm going to write this down in the room. We have about a 25 true range, a 25-point true range on AVERAGE on average in ES. That's 25-point true range on average in ES for the last 5 years. You're now at 60. So you're like 2.5 times normal ATR. So the question is, how can you expect the trade system to perform under extreme conditions? You can adjust that. Number one, reduce your holding period. Number two, reduce your trading period from 15 to maybe 5 or 3 or 2 or 1. Next, you're going to have to also adapt and change. The first thing you're going to have to change is your maximum risk per trade. You're also going to have to change probably your maximum profit. If you're asking a system to get out with a $400 profit, I mean, let's figure that's 8 points. That was one 15-minute bar right here. One 15-minute bar was your max profit. So you probably are going to reduce in an expanded period with those settings. It won't take many trades. So you're going to have to alter the system under that condition. Does that make sense for everybody? Now, some would say, hey, that's good news, but I say it's great news. And the reason I say it's great news is because you have the power to do that. It's not like here's a canned system that doesn't adapt. You have the power to change those settings in accordance to, all you have to look at is what the true range is in the marketplace. So that's volatility. It's tough for us to try to make money in markets that are not moving, right? In a 9-handle, everyone was crying when the market was, you wake up and an overnight session had 16 ticks from 7 p.m. Eastern Standard Time until 6 in the morning Eastern Standard Time. The S&Ps had a 4-point range. That's a real tough. Your holding period has to expand, and your bars would have to expand. So you'd have to take like 60-minute trade signals. So the difference is in extreme tight, low, compressed volatile ranges, you're going to have to increase your holding period, you can't use in that time frame a $1,200 risk. I mean, you could, but I mean, it might be, it's probably not worthy. So make sure that you understand the dynamics or the market condition in which you're trading. In a higher velocity, in a higher fast-paced market condition, volatility is defined by price swings and the pace of those price swings. And we have major price swings, and it's moving pretty fast. So that's where you will, number one, benefit from this. And I hope, Jerome, that gave a better understanding, the looking at the dynamics of where true range can help us rather than guess. And you can always look at what the high and the low is, but just why we put it in your radar screen first and foremost, it's there so I can say right now, what is the current range of the S&Ps without having to get my measuring stick out and do fast math and say, well, in the Dow, in the night session, in the mini Dow, we have an 82-point range already tonight. In the ES, we have a 9-point range thanks to Apple's earnings. We have a 9-point range already today in the ES tonight. I mean, it's 7:48 and the market reopened an hour and 48 minutes ago, and we already have a 9-point range. It took 9 points for 24 hours in October of 2017. So obviously there is some volatility here in the marketplace. All right. So Algo 17, what did it allow you to do? The difference between 17 and 16 was real simple. And format analysis, we want a format strategy. Actually, you know what? This might be interesting to do this. Let's go back. No, I'm just going to stick to, I was going to show what the original Algo, and what we did is originally, many of you guys were like, hey, it's kind of good news, bad news. When we created Algo, the first Algo optimizer, which was still a phenomenal idea at the time, and it is still a very valid, in fact, I still run some trading models on the original Algo. When we came out with the final 16 version, there were some changes that we wanted to do, and everyone got free upgrades, and that's what we do. Everyone gets the free upgrades. If you got if you just came in and said, hey, John, I just got Algo 17Xtreme. Do I need the old ones? No. But if we come out with any upgrades, any new additions, which, you know, all traders, or at least any business comes out with updates or an upgrade or a conditional change in the market. And you guys know that that was part of the whole indicator that those upgrades were going to be free, and that we didn't charge anyone for any of those upgrades. Now, some people thought it was, you know, more work to re-optimize things, but you can actually use the same settings and copy them over. So, for example, if I go over to, let me see if it's this page here, double check something. Format analysis technique. No, it's not that. Excuse me. Format strategies. Let's see. All right, so this is 16, and here's the original one. Basically, if you have the original one, all you have to do, if you go up and you look at it and move that up and change it, I can copy these settings from Algo original to Algo 16. I can still do that. Just the same as I can do it with 17. What is the difference between 16 and 17? And that's what we're here to talk about tonight. The main difference is we didn't change how to adjust for our start time and end time to optimize what's the best time to trade. That was, and then not only that, but allow us to have, well, maybe I only want to trade the market on the European session from 3 to 5, and maybe I want to trade the U.S. session from, say, 9 U.S. time to 1 in the afternoon. Or some of you may only want to trade the open outcry first hour and the last hour of trading and only take signals in that time frame. And if that's the case, you can optimize this to find out, should you begin at 9 a.m. or 9:30, or should you start at 9:45, 9:50? What's the best time frame to begin trading? And that would be a function of your start time, and then run an optimization by adding minutes to that start time. So we never changed any of that. Exit end of day. If you're a day trader and you do not want to hold a position overnight, then you can have 0, 1. 0 false, 1 is true. You can exit every trade at end of day. Position calculated method number 1 is set. This is SSO. It's an ETF, a minimum of $100,000. Did we change the position calc method? No. Max trade loss, max profit, did we change that? Well, I have, just for the purpose of this increased volatility range we're having in right now. Trailing stop, those functions are a matter of change with volatility. Scale out ratio is a matter of optimization. This is best to run the system by not getting out, but yet rather to not get out at the intended profit, but to get out by a trailing stop function. So that was one that was in 16, and this was a dynamic situation with the scale out ratio, which we optimized and made a little bit better. Next, your stop ticks and stop profits, we didn't change that. Here's where the big changes occurred, everyone. Right here. Do you want to take reversal signals? It's real simple. If you're in a buy, sometimes you get a false sell signal where the dynamics of your buy strategy, like trailing stops, get out with all the functions that you have, your risk factor, your profit loss function. I don't want, they're still intact, so just don't get me out of a long because there's a sell signal. Let the long position ride because the protective trailing stop function will kick in. But you can optimize to find out whether or not that works best or not. The big difference was we set, and this is where what I find is the genius behind this. We set each buy, whether it was a PPS buy or a high close doji, we wanted to look at, because in times of bullish conditions, buy signals had different characteristics than a sell signal. In fact, that's why when you ran an optimization in the original version, it optimized for the best profitable risk-reward ratio for both longs and shorts, as well as both PPS and doji signals. So if a high close doji is kind of a different and an earlier warning signal or buy signal that comes in a bar or two or three before a PPS buy, for example, it's an earlier warning buy signal. It might have different characteristics of a risk-reward ratio. It would probably maybe give us a lower risk and a higher reward possibly. I don't know that for a fact, but I have the ability now to backtest it and find a strategy and get factual backtested data. And to me, that was extremely valuable. And that was the big difference on Algo 17. You might find, hey, I don't need to optimize. I'm going to just take the buy signal and just run tests in of itself and have the same risk-reward ratio on buys and sells, and that's fine. But what else we did to this was to find out if it is true that buy signals or bullish market conditions are different than bearish market conditions. If rounding tops, and they always say the expression, tops take longer to form than bottoms. You get that V bottom bounce, right? So what would be a great form of confirmation? Do you take every single buy signal? Well, you can't really, right? I mean, on average, if you have a dynamic system strategy set up, you'll make money, but you're going to also have periods of drawdown. And the drawdown is a part of the business. It's the end of, it's just the way it is. And here's the thing. We found out that it was better to use some buy signals using a moving average function. So we built it in. And in this case, using SSO, buy signal is true. Risk reward 2.5 times to the risk to the reward is 2.5 times. So we're making 2.5 times than our what we're risking. And it came off better on a 60-minute time frame to strategize and using a 7-period moving average. That right there in itself, and most of you, if you do this optimization, and so one thing you could do is just to say, well, how do buy signals work? Well, first off, do we take PPS buy signals? Is SSO, is it better to take a PPS buy signal or a high close doji? Maybe maybe dojis don't form that often in an ETF. Maybe I should just be taking the PPS buy signal. Guess what? We broke it down so you can separate the kind of buy signal you're taking between a high close doji and the PPS. And then the added confirmation is to say, should we wait until the market closes above a moving average? And the next question would be, what moving average? Well, I don't know. That's a darn good question. I'm glad you asked, because we can run a back test and just simply go and optimize. And you can go in a 60-minute, I wouldn't do any less than 3, because then you don't really have a moving average. And I wouldn't use more than 20 periods, but I mean, you could go up to, I guess, 100 if you want. Remember, the more numbers you're asking for this with a jump rate of 1, the longer the optimization would take. So I want to find out, is it even necessary that it gives better profitability on buy signals with a confirmation of using a 7-period moving average? The market needs to generate a PPS, and it needs to close greater than a 7-period moving average. That is where this strategy, so if you wanted to build, for example, gang, if you wanted to build a long-only system, or you're in a daily buy mode, or you're in a weekly uptrend, I only want to take buy signals that are with the dominant trend. Or if you have the dynamics of a market, I mean, apart from the correction that we entered in this time period since the peak was made in late August, early September in the equities market, right? Stock market on average goes up 70% of the time, or whatever that number is. I don't want to put out fake news. I'm just saying that stocks go up more times than they go down. But when they go down, ouch, right? And when we enter periods of recession. So the majority of times stocks go up. So you would probably want to have maybe a long only in certain characteristics. If you're using let's say a leveraged ETF like SSO, 2 times the S&Ps, then you would want to have a system that gave long-only entries possibly. Does that make sense? Long-only on a system that does best when the market goes up. Sure, it makes a lot of sense. So therefore, when I go to format, I want to develop a long-only. I would turn all the cells off. And of course, I know we've talked about this before, but for those newcomers tonight, you just simply put 0. And that sell signal, it will take it off. High close dojis, we can go, I only want to take PPS and go to 0. Low close doji, 0, turn it off. Which, by the way, we didn't change from the Algo original version or 16 to Algo 17. We didn't change the function of your maximum trading bar to optimize what's the best average holding period for profitability on to get our max profit. So in other words, how many bars should we hold till we get our max profit? Because if we hold it too long, on average, the strategy would be, you would find out that if by 60 bars you don't see your max profit, get me out of this trade. You've been in it too long. You've overextended your welcome in that trade. Should you be entering a market order, or should you be going on a stop-in entry? And what we did with this was automatically filter in a stop-in entry a tick above the signal bar. And then if you see here, a tick above the signal bar. So in other words, if the market went up, formed a high, generated a buy signal, and the very next bar it opened and traded lower and formed an equal and opposite, then by definition, that's not really a really good signal. I'd want to get in if the market started to make in the next bar a what? Higher high. So I want confirmation the market's going to go up. Don't get me in at the market every time there's a buy signal. Get me in when it's confirmed the market makes a higher high. That's not going to guarantee 100% win, but it sure is going to give you an edge that you're not going to get in a false buy signal. Because generally speaking, if a market doesn't make a new higher high, it's probably not going to, it doesn't see what we call follow through in the marketplace. But this is another optimized feature that we said, should we go into the market or should we have a stop-in entry? And within how many bars? Is it the next bar? Is it 2 bars? Is it 3 bars? Is it 100 bars? I mean, obviously, if the market doesn't go up almost immediately, then it's probably not a great signal. But we optimize, and we left that optimization function. Maybe we shouldn't have any bars, 0, up to 6 on an increment of 1. And you can clearly see, if you, we don't need to optimize that one right there, right now. You can clearly see we didn't change that either. Drawing lines. I like the lines when I'm looking at this. It helps me to anticipate when I get in. What do I mean by that? And we'll get back to our optimized settings in just a second. If you have a buy signal, for example, in SSO, it'll tell me where the new trailing stop is. It'll tell me what the original stop was, and then I can see where my profit target might be. But now that we've eliminated that, we can also see where our trailing stop function would be. So in this case of a short, it gave the entry. You see where your risk is. It didn't get out of the profit at that setting at that blue line because it's been overridden. It says, get me out on a trailing stop function or a reversal buy signal. So that's where you can see, using the SSO in that situation, you can see the trades that it generates with those particular settings. So for the Algo 17, when you go up to format strategy, what we found, at least for building our own strategies, is that first and foremost, I have to say it again, and I don't want to sound like a broken record, but I wanted to reaffirm this. Markets that go up have different characteristics than markets go down. Markets go down, they're very fast, they're very furious, and you might get better performance on a sell signal when the market nosedives. So you may have a better risk-reward ratio on a sell signal than you would a buy signal. And your holding period might be a little bit different. But more importantly, we want to know what is the moving average, if that is a consideration. Sell signals, it's kind of ironic. I mean, I don't see the big difference between 7-period moving average and an 8-period moving average, but there were differences amongst different markets between that moving average getting better profitability by using, in this case, with that particular market, a 7-period moving average, except for, which is really unique, the sell signal, which was 8. So it was roughly about the same time. All right. So that's where Algo 17, it added the function of maybe giving better confirmation on buys and sells. It broke down each individual signal, buys or sells, with the risk-reward ratio. So that's where I think a couple things in this environment, and Ruth asked a good question, which is, and I want to get to that. When volatility is increasing, should we only backtest 30 days or less? Well, the first thing is, if you have a backtest on a strategy, and you know that, well, PPS works, high close doji works, it's just that we're getting what? Faster moves, and you're getting expanded moves. You're probably going to miss out if you're using a $250 or $175, or let's face it, 3 points in the E-mini S&Ps on a given day on a 5-lot or 6-lot is a lot of risk. That's $150 a contract, right? So either you got to drop your risk, your lot size down, Ruth, or you got to increase your risk per trade. You can't use $150 risk per trade like you could when we were in maybe a 15, 16, 18, 20 handle type of trading range in the E-mini S&P, correct? So do you have to go through and optimize everything for the last 30 days? No, but the first thing you got to do is maybe reduce your lot size, number one, and number two, maybe start developing a system and just do a quick test. And I would go, if you're into like 4 or 5 days, most times we get a period of increased volatility that lasts more than a week, right? So as you start to look at the daily ranges, you're probably going to have to just simply expand your amount of risk per trade, and you're going to have to expand. If your profit target was only looking for like $800, you may have to expand that up to what, 50%, which is from $800 to $1,200. So in other words, what I'm saying is on a trade system on the ES, for example, format strategy for day trading, when you get that expansive move, you can no longer use $150 max trade loss. You just can't. It's not going to work. You're going to have to increase that max loss. You're going to have to increase your max profit. That is first and foremost. Your risk reward on this ES is a risk reward on buy signals is 3-to-1, right? So that's kind of an interesting concept, because we have a risk reward on sell signal here has been optimized at 1-to-1, isn't it? Well, I mean, that's got to show something right there. Your holding period, your moving average, and your risk reward. I mean, you're finding yourselves with faster profits in a downward market. Look at the risk reward on a high close doji. It's not 1-to-1. It came out 2-to-1. Look at the risk reward on a low close doji. It came out to 3-to-1. So in this environment, trading the E-mini S&Ps, this kind of optimization with the new Algo 17 really breaks down and helps give you information that we never had before, and proves that buy signals and bull markets act differently than bear markets. We just have a better way of getting testifiable evidence to it, and that evidence and that information should help you to understand, when you get these trades, you gotta adjust those settings, especially your profit target and your max profit and your max loss. And I mean, I hope I don't like what my goal is to teach is just logical information that's clear cut. And that's the thing about when you have a system that you could say, well, you know, I don't really like this environment to trade. It's too choppy for me, or it's too fast for me. Well, that no one's going to cite you or fault you for that. You know, we in the trading room I've actually said, hey guys, if the volatility is too much for the ES, and you're not changing your systems, reduce your systems and go to a. We even talked about this with here. Remember I mentioned this in the trading room, and I said you can even drop it down to a 30-second system in times when you're talking about a market that is moving. What did we have back on October 11th? I think in an average 2-minute holding period was something like 7 ticks or something, 7 points, excuse me, 7 points, 28 ticks. Holy moly, 28 ticks, and you got a system that was used to taking and wouldn't risk $150 or $200 on a trade. Man, so you have with TradeStation the availability to knock down and customize your trade system rather than run a 15-minute. Just run a system for not even 3 minutes, 2 minutes, 1 minute, even 30 seconds. So you have, that's what's so amazing and powerful about this. You have the ability to change and adapt, not change so much, but adapt to the market conditions. So it's not like, you know, here's a black box and you know, deal with it. Here's a system that's transparent, and yes, you can deal with it. And that was what's incredible about that. And it's not just for day traders. You can run the system for, I mean, what I find fabulous is to run it for all types of products, whether it's the day trading E-mini S&Ps, to looking at spiders, to looking at inverse or looking at leveraged ETFs that track the S&Ps, SSO, or whether it is actually volatility in the VXX. So to build your own strategies, whatever that is, whether it's trading a stock on average, and again, the key here, if you're trading a stock, more people say, well, I want a trade system on every stock. Well, that's not going to happen. And what you're going to have to do is you're going to have to take a stock that has, on average, good volume. So what is like, for example, take a look at Apple. I'd say on the last 10 days, 39 million volume. Can everyone see the radar screen right now? I got a no and a yes and a yes. So I'm going to refresh the screen just so that it does come up. So hold on 1 second. I don't know, the thing between cookies and this and refreshing. All right, Jonathan, thank you. All right. So if you look at the screen, I mean, ironically, look at Apple, 52 million. So I can tell you right now, the last 10 days, Apple has been averaging, or let me double check. Last 10 days, the average volume is 39 million shares a day. We did 52 million. So that's got to tell you something special is going on. 52 million shares. So Apple's last at 207 on the night session closed down at 207. It beat top, beat bottom. It missed on guidance and wasn't good, and so the stock's cratering below 207. Next stop 195. Anyway, what the point is I'm making on this is you want to pick a stock that's, if you're going to build a system on a stock, it needs to be something that's consistently moves, and it just doesn't just sit there, and it's not in a tight trading range, but it moves and it's correlated to the overall market. You want some type of correlation that it can move. You'll look at your average true range over the last 10 days or in this time period. Let's go to format here, and yes, it's 10 days. In the last 10 days, it has a $7 range. So now I have a lot to work with. I know that if I'm looking at a swing trade or a 60-minute system or a daily system in the market, or I'm using a weekly, I can start to build on that ATR, can't I? So on a 60-minute basis, if I'm asking for a system to give me a 20-point move and the average daily range is $7, I'm going to be sitting in that trade for more than a day, right? So as a day trade model, I have to work within the confines of a 7-handle average 10-day range. Now here's the thing. You can go up here, each and every one of you can go up here and you can format the average true range, and if you want to change that number to 50, 100, whatever you want on average, you can do that. I always like 10 on most stuff, basically because it represents the last 2 weeks, which is the current market environment. So I can clearly see we have $7, and all I'm going to do is go up and I'm going to copy the window, and we're going to paste the window into this page. So all I did was just copy all the settings, and there's no strategy, there's only analysis. So on an analysis, the first thing, I don't really need, remove that, I really don't need the person indicators on this. So I'm going to get rid of, turn that off. I don't need the triggers, so I'm going to turn that off. I'm going to then, for a strategy, change it from candlestick to bar, because I don't really need the candlesticks. I left, as you can see, the high close and the low close doji on. So I'm going to go down and I'm just going to simply insert strategy. Okay, so we have 1, the original, 3, 101, 102, the original, like I said, the original one, 16, and I've deleted all the others. 16, the latest one, the X one. When you, for all of those that started with me from the original version, you probably had all of these sent to you, right? Because every time we had an update, we sent you these new ELD files. You can delete the old ones if you don't want them. You can keep them. For anyone that has 17 and you didn't get the old one, the old ones were they're the same type of settings. The difference is Algo Extreme, we broke down the buys and the sells separately with the moving average component behind them. So that gave a massive difference. And we also separated, as I shared with you earlier, the risk-reward ratio between buys and sells, high closed dojis, and PPS buy signals. So then we would be able to determine, hey, is it true that high closed dojis come before a PPS? And if that's the case, maybe the risk-reward ratio is a little bit different. Those are the questions that I had on a lot of trades that I did, and that's why we built it in there. But anyway, we're going to go and just click on Algo 17Xtreme and hit OK, and we have whatever you can see, it's by default, everything's set at 0, and we have to start to optimize. The first thing is, before I don't even know what max trade loss should be at this point or max profit should be at this point, because we now need to go to determining what are we going to do here. Are we only going to take long only, or are we going to take buy and sell? So what I was explaining in what we're talking here, and can everyone make sure everyone can see this? This is the format page for Algo 17Xtreme. Can everyone see this? All right, that's all I needed to know. Thank you. At this point, what's the first thing you want to do? Well, obviously, I want to find out a buy signal. So if you're building a system from scratch, max trade loss, I mean, $500 for a stock, what's our position size? Our position calc method for equities is $100,000. Let's say I only have $25,000 to deal with. So start with $25,000 just to start with, because we have no data. We're dealing with raw, we're building our own model right now. It's like starting with a clump of clay. We're going to try to build a vase together, right? So max trade loss, let's just start. If we got $25,000, 10% of a $25,000 account is $2,500. So, I mean, I wouldn't want to, I'm going to start somewhere, and I'm going to go maybe 1250 for max loss, and then for profit, let's just put it at 5,000 just for right now. Both of these numbers are irrelevant right now. We just need to input something. And that's my thought process. Start trailing percent. I'm going to leave it, and I'm going to change it to 100, meaning I don't want a trailing percent profit. Scale out ratio. I'm going to set this starting with 0 right now. I am going to reverse signals. Right now, I just want to go with a buy-only system. Sell is set at 0, which is false, so it's take a sell signal. It's set at 0. It's not taking sell signals. High close doji. We're not doing that. It's a 0. It's set at 0. LCDs, it's set at 0 right now. Our max trading bars, I'm going to go for a daily chart. I'm going to say minimum, or maximum, let's go with 100 days. I mean, that's over a quarter for a trade signal, all right? So we're going to leave that. Enter trade market order. You know, I'm not sure right now. Let's just leave it at there. Now let's start building on our buy signal. We're going to start with PPS, so true. Risk reward, I have no idea. So let's start with 1 at the least, and let's go on a daily chart. Let's say 10, and let's use a 0.5, which is a 0.5%, and hit OK. A buy moving average confirmation. Do I want a 3-period, or do I want to go with maybe a 20-period, which would be a 20-day moving average? You know, if we get a buy signal above a 20-day moving average, maybe that's a little much, but let's let's just input 25 for the heck of it and hit OK. Do we want a last conditional change confirmation? At this point, I'm not sure. So let's hit 0 for false, 1 for true, an increment of 1. Now, what did we just ask it for? You see thanks to Ruth, I copied her idea. At one of our mentoring sessions, Ruth was down at, I think it was mentoring or it was a seminar. I can't remember, Ruth. But Ruth says, John, I'm getting older, because Ruth is like 26 years old. And so she got out of her teenage years, and she said, I can't really see because TradeStation's colors aren't vibrant enough for me. And so I don't like the gray. So she's put in the fuchsia color. And so the last conditional change is fuchsia. So the fuchsia color, if the market generated a buy signal, it would need to close over that fuchsia color to generate a quality buy signal. So we would say that's a last conditional change buy setup. The white line would be that's a bullish last conditional change with the fuchsia color, and the white dotted line is a bearish last conditional change. And clearly we can see Apple's been in that little trading range up until tonight's earnings. Now we're going to optimize the whole thing. We're just setting and starting to build a buy-only system. Now, this is going to give you a total elapsed time. A lot of you didn't know that you could look to optimize those types of settings all at once. So depending on how many days or weeks or years back you're doing, number one, and number two, it depends if we're only doing buy signals. If I ran that type of an optimization for buys, sells, high and low close doji, it might take 5 hours. And as you can see, here's what the system came up with long only. Now, we're just in the process of building something here. First and foremost, this goes back since November of 2016. To further build your system, let's first take a look at this, and we say, wow, the profit factor is 3.6. It only did 21 trades. But if you go down and you say it's only been 1 year, 9 months, you're actually in the market half the time. So it doesn't, it's in trades half the time. That's why it doesn't do a lot of trades, because it's a daily system. All right, that's number one. What's the holding period? That's what we want to look at. Buy and hold return is 85%. Your return on your account, 700%. We'll work on return on capital, which is 11%. I would like to see that beat buy and hold return. So we're just building on our model, but we need the information provided here to help with our other settings, such as the first thing is, what is the average time in a winning trade? Average time in a winning trade. Well, where did I, average time, winning trades, losing trades, average trade. Average bars in winning trades, 19. What did we put? 100. So your average bars in a winning trades is 19. So I'm going to write down and say, okay, we need to change the optimization setting for our average time in a trade. So go back to Format Setting. It's a good start. Why is this a good start with Apple? Well, it's probably the fact that it starts off making money is okay. I mean, that's a good thing. You know, there's a couple things that you can do, gang. You can also go back and visually inspect some of these trades too. All right, that also will help you to uncover some of the trade systems and going back. And as you can see, we asked this thing to go all the way back to 16, and it didn't even generate a trade back there. The first trade it generated was 17. So in just this environment for the last year and a half, and go back to format, we asked for 2 years. I mean, you can change that back to 5 years, 10 years, something like that. And we'd say, okay, so the system, it's made money, but it's long only, and we need to work on a few parameters. I mean, we're just beginning to build the model on Apple. And again, long only. But I'm walking you through the difference of going through the prior versions that you have, and can you take those settings and apply it to 17? And the answer has been, yes, you can. So we go over here to format our strategy. And what did we just say about holding period? We've got max bars 100. So now let's optimize that. So I'm going to go 10, and I'm going to change our maximum holding bars to 50. And let's go with an increment of 1 and hit OK, hit OK, hit optimize, and let it run. And what happened? All right, so the curve got a little bit better. And that's what I want to see when I optimize something. I want to see the curve getting better each successful time. We go back, and what did we find out? We found out that our average bars in a winning trade was 19 because we had some erroneous number. And now our average bars dropped down to be more precise to 17.7. And our settings, and if you look down here, go over to settings, what did we do? Max trading bar maximum was 26. The system says it provides the best profit by 26 bars. That's what it optimized out. Your performance summary said your average. Remember, that's average. Some is going to be great. Some is going to be less. Now, when we just ran that optimization, if you notice up here, you have a strategy optimization report tab. It's next to the $sign. If you click on that, you will notice that your person Algo, it optimized all these different, here's your optimization settings. And you can see what the best, we asked for the most profitable one. And it came up with 26, there's 25, here's 16. And the difference was between 14.9 and 12.6. That's $14,900 versus $12,600. Okay? So in the interest of time, I just want to get through this functionality of how do you build up a system. From a day system on a simple product, you want to look at something that moves a lot. You don't want to go with a small cap stock that doesn't really move, doesn't have a lot of volume, and you can have a staple of stocks to run an automatic system on. Or the indexes, such as the IWM for the Russell. You can have, of course, the S&P or leveraged ETF like SSO and inverse ETFs as well. And you can build upon that. We've been looking at in the trade room for the last week. I've been warning since last week, warning or advising, alerting people to spot and watch for a reversal in the semiconductors and to focus on SOXL, the 3-time leveraged ETF on the semiconductors, SOXL, semiconductor long, SOXL. And you can obviously go and develop the same type of system off of a ETF and a leveraged ETF. It's the same process. But what your first starting point is to make sure that you deal with any product, start with good volume. Then look at your average true range. And on that note, let me just go up and go to our ETFs, and let's just take a look at, double click on symbols, and it puts everything in alphabetical order. And here is SOXL. So I've just highlighted SOXL. Now, SOXL, it's not one of the more dynamic ETFs like, for example, the S&Ps or stock like Apple with, 50 million shares a day, but it does 1,000,001. It's a leveraged product, but it's trading $109, and look at the 10-day ATR. Whoa, mama, $11.45. No offense, quick math is it's a little more than 10% in the last 10 days of average true range. It's a mover. So this is one that you could be had been or can be looking at kind of like a swing trade and a systematic approach for taking buys and sells. And obviously you'd want to filter out buy signals that don't close over a moving average, et cetera, et cetera. So I'm just sharing with you, how do we use the person's lifetime package, number one, combining some pertinent information quickly to see which areas do I want to build a system. When you look at a top-down approach, you say, hey, listen, we're entering in a period of maybe seasonal strength for broker-dealers. Maybe I want to start looking at developing a system in broker-dealers or the financials. Maybe it's the KRE, the regional bank sector. That would be a reasonable thought process. So the question is, if you go up here and you double-click on your symbol list and you go down to KRE, you'd say, oh, look at that, 13 million in the last 10 days. Oh, that's got some volume. It's a $54 stock. It's got, a $1.50 range. So it doesn't have the kind of components that you would want to build and put a lot of effort into a trading system, because it's not showing a lot of consistent volatility or returns. So that's the thought process of how to put together an algo system strategy for yourself. A stock like Apple, a product like the ETFs on the indexes, total different ballgame. I hope tonight, I just wanted to go through how do you integrate using picking and choosing a system, number one, or market to build a system, number one, and then what's the pecking order that would be important to start the process of trying to find a profitable system. Or if it's not just a system, but one that says when it generates a buy signal, by gosh, maybe you want to piggyback that trade, or in the inverse is true for a sell signal. And then you can kind of get an idea of what the expected move might be. One average, that's where you get your, of course, your lines in the sand, what your entry is, what your risk is, and things of that nature. So then you can kind of maybe, instead of trading this as an automated system, you could also use it on a discretionary. What does that mean? Instead of letting it just trade automatically, use it for confirmation that says, oh, it's generating a buy signal. It's a high close doji. It went with a PPS buy here. It closed right above the last conditional change. My person's market catcher, the indicator showing slight improvement in its relative strength. And boy, the volume is showing bullish convergence. I don't know if everyone can see this, but I'm just taking an example of this. I'm just cherry picking that setup right there. Here's a dynamic trade, and you would say, that is part of my, as we talked about in summer school, that's part of my game plan. I take buy signals, or I want to take a system signal when I've got bullish volume convergence. Does it happen in this environment? Well, this happened back in May. Do you get other systems, divergences? Do you get other better signals? Here's one that has confirming volume and confirming relative strength, and say, I kind of like that trade. Now, again, this is a daily chart. So is the relative strength improving? Is the volume improving? I got a buy signal. Should I take it under those conditions? And where's my risk on that trade? It's painted on the program for you. Now, your profit target's there, and unfortunately, this had the trailing. This stopped out on a trailing stop. So you'd have to watch your trailing stop function when you get to that point. But I wanted to go through Algo 17 tonight, and we want to do this not just on a whim, but on a monthly basis, as we've tried to do with our PUG groups as well, and go through and say, hey, let's make sure that you guys understand maybe the pecking order of building a system and what you look for in a market and how to best get the most out of this. That concludes our session tonight. I went a little bit over. I apologize about that. I think I answered a couple of the questions that were in there. I thank everyone for participating. I hope you found value in tonight's session because, quite frankly, this is the most dynamic market environment. It becomes more dynamic with the rotation of the market and everything else that we've been seeing with the Federal Reserve, our politics. I mean, this is not just domestic, but globally. It's amazing. So I hope this is a beginning of giving you guys just an awesome jumpstart to your careers. And I'll see you guys the next time we meet. Thank you, everyone, for joining me tonight.